Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Monday, November 10th, and my name is Raleigh White, and I'm coming to you live from a beautiful but kind of chilly fall day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be recovering a range of important topics with a special focus on day trading. Today, he's going to talk about why day trading is valuable in today's volatile market conditions. He's going to share the advantages of day trading the indexes and the tools that you need to do that. He's also going to talk about trading breakouts and pullbacks and reversals intraday and the importance of using market internals to help set up your entries and your exits. He's also going to share the pros and cons of day trading the futures markets versus options. And out of the mailbag, he's going to answer this question: Thinkorswim, TC2000, or TradingView, which is the best platform? Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Now, remember, folks, also that the chat is open to everyone. And remember the ground rules, folks. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever. And also, please keep your side conversations to a minimum so that the rest of us can focus on the education and the information that Roger's going to be sharing. Because when you think about it, he's taking time out of his very busy day to help give us an edge in the markets and to help us all become more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 a.m. Eastern Time for Roger's pre-market briefing, we note that there were several key catalysts that we needed to be aware of today. In the overnight markets, we saw that China was up 2% at a 10-year high. We also noted in the crypto world that Bitcoin prices were increasing, and as a result, stocks like MSTR was up 2%, Mara was up 4%, and Coin was up 2%. In the Magnificent Seven world, we saw that NVIDIA was up 3% and Tesla was up 2%. On the tech side, Palantir, PLTR was up 3%. In the chip sector, Micron was up 5%, AMD was up 3%. And then on the consumer front, we had a big company, Tyson Foods, getting ready to release their earnings before market opens. Now, for those of you who are wondering about the importance of catalysts, what we're really looking at here is information that is either known or will be known, but is not yet priced into the market. And therefore, we just need to be aware that there could be volatilities in these sectors and to be careful about that if we're looking at investing stocks that are in those sectors. Now, as far as Roger's small cap watch list is concerned, there were 6 tickers that he gave us today: SELX, IMTE, MOVE, IPHA, GLTO, and IFRX. Now, you'll note the GLTO and MOVE here, MOVE, both had asterisks there. And that's because Roger was going like, they're borderline small caps. They're kind of expensive when you look at $18 a share versus $2 a share, but he decided to put them in there anyway. And the same with GLTO. You look at the share as $26. He says it's hard to make an argument that that's a small cap, but let's keep an eye on that. Anyway, so along those lines, let's go ahead and switch my screen here and let's take a look at the charts and let's see what the small caps are doing for us so far today. So you'll now see my charts and you can see that there are 8 panels. In the upper left-hand corner, we have SELX, and we see the pre-market open was at $2.30. Well, we opened down here, and even though there's been some pretty decent volume here, we're not really approaching this area. So it doesn't look like we're going to have an entry there today. Next, we have IPHA, and its overnight high was $3.03. And we can see here that we opened up and we're slowly kind of climbing in this direction, but we have some pretty decent distance to go here. And we can see volumes kind of falling off a bit. I'm not quite sure we're going to make it here today either. On IMTE, the pre-market high was $2.39. And we opened up here and just been chopping sideways on very, very low volume. Don't expect us to come to this area either. In the lower left-hand corner, we have GLT0, okay? And we see that the pre-market high was $26.38. So this is one of those stocks that's really kind of a borderline as to whether it's a small cap or not. And you can see here at the open, we kind of flirted with this level, came up within a couple of ticks of it, and then have just kind of fallen off a bit. So hard to say what could happen here, but right now, once again, it doesn't look like we're making a move in that direction, but of course that could change. Speaking of move, MOVE, we see that the pre-market high here was $18.89, and at the open, it just kind of moved sideways. But here recently, looking here at the 1130 bar, we see that we broke through. We actually got a fill, and we went up to 21.23. Let me do a little bit of math here. 21.23, 21.23 divided by 18.89. Okay, so that's a 12% move. And the way we track things, we consider this to be a winning trade. And what we mean by that is that if we get a hit, if we break through this level and we at least move 10%, above the entry point, we track that as a win. And it certainly did go up. It actually went up 12%, and then has fallen back into this area here where it's resting right there. So it'll be interesting to see what happens there. And the next pane over, we see IFRX. The pre-market high was $2.47. And we can see here that we've just, once again, not doing anything here whatsoever. The other two panes, if you're interested, this is the SPY. And we'll talk about this a little bit later, but this was this critical area of support that Roger wanted to keep an eye on today. He expected that we were going to see some fireworks early, potentially pull down into and through this level, and we certainly did that. And the same with QQQ. Fireworks early. Here's an area of support down here at 617.36. It did come down into this level. It's kind of bounced off of that, but there'll be more discussion on that in just a bit. So let me go back to my regular presentation here. I just want to conclude on the small cap watch list by saying that Roger's selection process is not only based on price action, but he really does look for extreme volume. And we're talking about volume that's as much as maybe 100 times what the normal volume for that small cap is. And he wants to see that pre-market, and that's what drives his selection. We also recommend that if you consider entering one of these small cap trades, only do that during market hours. Don't jump into that pre-market because you'll be sorely disappointed. And secondly, if you don't get a fill by around 2 p.m. Eastern time, just forget it. It's not worth that potential to get the fill only to be disappointed with it. It's much too risky. And also, if you ever get a fill on one of these small caps, don't hold the position overnight. It is not worth it. It's not worth it at all. Okay, so as far as Roger's large cap pre-market stock list is concerned, you noted that there were 7 shorts that he provided, okay? And once again, these were good-looking shorts, and I really like something that he said. He basically caveated by saying, look, if you consider any of these shorts, do not look at something, unless, it was down on Friday and it's down today. He basically said, given the fact that we just saw so much jubilation in the market in overnight trading as a result of the potential, shutdown news. It just said, look, when you consider these things, and if you look at the charts, anything that you short today, make sure that they were down on Friday and they're also down today. But this is on his short watch list. As far as the longs are concerned, he shared 12 longs with us, and you'll note that there were 1, 2, 3, 4. 4 of them have asterisks on them, which means that these are good A-line setups. For those of you that know what an A-line setup is, or you're in the A-line program, there's a potential that these are going to be stocks that you're going to be getting an alert on. So once again, fair amount of activity there. Now, with regard to his closing comments today, folks, once again, the tech markets were all up and positive, largely on the shutdown news that we got over the weekend. But Roger did point out that the Dow was muted, Once again, it was not as excited. It also noted that the bonds were also down, and low in their range, which was kind of interesting. He did point out that the VIX was lower under 20 and that the pull to call ratio was back in balance. But he did say this, guys, pay attention. All the overnight gains in the SPY and the QQQ were in a very narrow range. So we saw this big spike up, and then everything just kind of chopped sideways in that area. And he said, look, it is Monday. And he says, you know what? Things are going to look good early. I mean, the market's going to open up. And he says, I wouldn't be surprised if there were some fireworks, but folks, resist fear of missing out. Be careful. Watch out for profit taking and wait until the afternoon to see how the market's really going to settle itself out. So, with that, folks, we have a great agenda today. The focus is on day trading, and Roger's going to tell us why day trading is valuable in today's market conditions. He's going to share with us the advantages, of day trading the indexes and the tools that you need to do that. He's also going to talk about trading breakouts and pullbacks and reversals intraday using market internals for entries and exits. He's also going to talk about the pros and cons of day trading the futures markets versus options. And out of the mailbag, yes, question he gets asked all the time: Thinkorswim, TC2000, TradingView, which is the best platform? So with that, folks, we're delighted to have you here, and let's say hi to the team. Matt, how you doing there, buddy? Roger,
Hanging in there.
note that we're all kind of like wearing hoodies or sweatshirts or things of that nature, because I just think we had a chill come through last night.
Yeah, it's actually, to be honest with you, this is the lowest we've had. It's going to be 39 degrees today, right, Matt? In at night,
Yep.
or yeah, and then tomorrow morning is going to be the low. So we still have
Identical to what we're having here in Central Texas and Austin. But I tell you what, it is beautiful. I mean, it is cool and crisp. There's no doubt about it, but it is a beautiful fall day.
Yeah, it's very, very, very nice, beautiful weather. But it is getting crisp. It is definitely without a doubt getting crisp. Let me show you something. Hold on, just bear with me. I got to bring something here. Hold on.
Okay. And man, we have a bunch of people here. Yeah, Canadian Clipper or whatever we call that. That cool. What you got there, buddy? Roger busting out the heater in Florida, no less.
You know what? I went to the store yesterday. I asked him when I was checking out. I said, "Hey, have you guys been selling a lot of these?" He's like, "Nah. We just discounted them another $20. They're like $30 now." So yeah, we have air conditioning. It's too cold in here, Ralph. I'm too sensitive. They keep it at like 71 here. See, in the old office, I could have done something. I could have in the old office, I could just turn off. I could regulate the AC because we had our own building. So people would, I would basically, it would be up to us how I'd like it in the room. But those days are gone. So I have to, and I don't need the big lights here. So, and I'd rather have it cool than warm. So I'm just keeping it nice and but anyway, I have my heater. It's going to get ready to go. I'm sure it's going to be used quite a bit. I want to get it comfortable here. We got shades for the door. This is our second week in the office.
Yeah, you're just settling in, man.
I'm going to be spending a lot of time here. So, anyways, so let's talk a little bit about the market real quick. I have a huge agenda for you guys for today, and I think you guys are going to be appreciative of it. So let me share my screen. Screen number 5. All right, let me just that to the side here. Okay. And yeah, so as you guys can see here, the SPY, let me erase these levels.
I just, your market comments this morning, your pre-market comments, Roger, were just so great. You basically said, be careful, folks. There's going to be fireworks. Everything is going to look nice this morning based on what we're seeing. But is that really what? And so I'm just very interested to hear your thoughts as to how the market's been performing against that.
Yeah. And this is what I said. I said, we're going to open up near the highs. It's going to look really, really nice. It's going to look really nice in the open. And it still does. And then we're going to sell off, which we did. We made remember I said the wick. I think I used one of these wicks as an example, but there's the wick coming in right there.
Yes.
bouncing off the key levels and then coming back up. Which is exactly. I dare anybody to tell me that I did not say this morning. Be careful, be careful. But we're now coming back up. So this is, and by the way, this is considered the afternoon. I mean, the market's been open for a couple hours already. So I like what I'm seeing right here. I do like what I'm seeing here. Now we're above the VWAP. The question now is, are we going to get above this level? I don't think we are. I think this is about as good as it's going to get, unless we start getting some good news out of Washington, D.C. saying, it's. I haven't checked the news in the last 3-4 hours, but it was kind of like it's almost a done deal. We're very close. We're making great progress. The sticking point was there. So that's what's driving this price right now. There's no question. But there's a problem. There's a big, big problem. Here, let me show you what the problem is. There's always a problem, right? I can always find you a problem, even when there's hardly any problems. Okay. All right. See, well, one of the big problems right now is we rejected the VWAP. We need to get above. We need to get above the VWAP. We need to get above this level, and I think we will. But that's problem one. Problem two, that's a little problem. The big problem is this. The big problem is if you look at the futures, you'll see that the Dow is barely up.
Yeah.
So most of the concentration that we're seeing is happening in the Nasdaq 100s. That's not good. I want to see a broad market. I want to see a broad market rally. So that's also a major red flag for me. Okay. Another red flag is, and this is where you guys listen to what I'm about to say very, very carefully. You see this. Thank you, Bob. I appreciate it. Thank you for the information. I appreciate that. Getting a lot of people. Yeah, the market is very, very news driven right now. Very, very news driven right now. But, and again, this is a big but. This news about the government reopening, this could be the worst thing that could be happening to us. What? Well, let me explain. Remember, when government reopens, Fed data comes out. And when Fed data comes out, what happens? We start hearing unemployment numbers. And that Fed data may not be what we want to hear. Now, the bond market, which is right here, the lower right here. This is the bond market. Notice what it's been doing today all day. It's been going down, not up. That increases interest yield. Okay? That increases interest yield. And VIX, which is right next door to it, is now back down. So VIX is okay. Remember something. The VIX looks ahead 30 days. Okay? 30 days, which is not all that much. Okay? But the bond market this is a 10-year bond, and this is looking at our economy. And what this is telling us right now, these are very small-sized candles. They're very sheepish, so I don't see a lot of follow-through here. But at the same time, I'm not exactly loving what I'm seeing here. I don't like the bond market. The bond market is giving me a lot of pause. Okay? A lot of pause. Jason says, use data miner. AMD made $510. Excellent. We always like to get testimonials like that. Thank you, sir. Appreciate hearing that. Okay. So a few red flags. There's a divergence between the large caps and the technology stocks. I'm still liking what I'm seeing. I'm still hoping that this news is going to resolve itself, but the market will get happy. But the question is for how long? And can the market make a swing high from these levels and come back above this? Because if the market makes a lower high and that peaks, and this is the peak, it's going to be very, very dangerous for us to trade pullbacks. Remember that. And we're looking for the market to break this level right here, right about 680-ish, right around here. So we still have a ways to go, and we'll see. I'm hoping that they're going to put an end to this madness, the government shutdown, and we can get back to making money. Does anybody here know the latest, like the last hour and a half? We still making progress? Are there any? Do you know, Matt? Does anybody know?
At 11:52, he said that he was on a call with White House Republicans.
Trump? Or who was on the call? Shoot.
The Senate Majority Leader.
Okay, all right. So it looks
That
like
would be
so
Thune. Yep.
the House is calling the reps back. Okay, okay. All right. Well, it's not a done deal. No, it's not a done deal, Cyrus. It's not a done deal. But the sentiment towards the deal is getting there's no question about the fact that it's getting better. So anyway, that's where we're at right now. And folks, I'd love to tell you right now the latest and the greatest and tell you what my crystal ball is showing, but I'm going to tell you the truth. And the truth is we're completely dependent in the short term on the government shutdown. In the longer term, it's a little more complicated than that. I think we need to see the job data, and we need to see. Jill says it will have to go back to the House for a vote. Okay, great. And Gary made money on Move. Move made a move. By the way, what is Move doing now?
Yeah.
Did anybody, Raleigh, were you going to talk about Move?
Yeah, I was going to basically said when in my pre-market of all the small caps we had this morning, Move did break through the 1889 level. It went up about 12%. So technically that's a win for us. And now it's come back below that level, but some people actually jumped on that. Obviously, it took advantage of it. All the other small caps, nothing really there, but Move did go forward. And I did point out, just as you had said, Roger, it's borderline small cap at $17. It's a little on the pricey side, but it did make a move through that level and went up about 12%.
Better than a sharp stick in the eye.
Yes.
All right. So we talked a little bit about the market. You guys have my prognosis. I think the sentiment towards this thing getting done is now in a much better place right now. So I think we can move on from here. Now, I'm going to talk about day trading today. And right now is a really good time to get into day trading for several reasons. There's several reasons, and I'm going to give you these reasons. Now, reason number one is, according to the word on the street, index options are getting settled in one day right now, which means if you're using options, then you should know that you can day trade with a smaller account than $25,000 right now as a result of that. Okay, so that's one good, real good thing. Okay. And again, from what I understand, most brokerages like Thinkorswim, they're settling almost instantly in cash accounts. So all you need is a cash account right now.
Mm-hmm.
Okay, that's question. That was the question number one. Question number two was, and this was a great question that was asked. Let's see, who asked me? It was a great question. Somebody sent me an email about this. It was Dr. Gregory. It was Gregory, Dr. Gregory B. I think he's a dentist. All right. Dr. Gregory started asking me very detailed questions about what platform to use. Is Thinkorswim better? Is TC2000 better? Is TradingView better? And I'm gonna give you the answer. And again, you're not gonna want to hear this answer. Okay. The answer is neither is better. And let me explain, okay? I wish there was this one beautiful platform that was easy to use, that could do absolutely everything and all that stuff. But here's the problem. You have to back into your platforms. Let me give you a perfect example, okay? I love the charting of TC2000, and I love how the graphs look on TC2000. But TC2000 does not have futures, and it does not have E-minis. Okay. So if I'm using E-minis, or if I'm using the functionality of AlphaZone Pro, I can't use TC2000. Okay. It's not effective for me. Okay. It's not good for trading futures or analyzing futures. So if you trade futures on the AlphaZone Pro, TC2000 is not going to help you. Okay, but it's my favorite platform, and I'm not being sarcastic. It's my favorite platform for stocks and stock options. Okay, now, TradingView till recently did not have the functionality to do Pro Trader Dashboard. TradingView now does. Okay, TradingView now does. So now you could do that. In principle, TradingView now is actually the only platform that I believe that could do everything for you. The question is, a lot of people complain the charts are not pretty. A lot of people still complain they don't like the in comparison to Thinkorswim, they don't like the way the scanner looks, blah, blah, blah. So my point is, you're not going to find one great platform. You could usually do away with two. Okay. Some of you will do away with one. But like TradingView, you could pretty much do everything in TradingView. But it's really hard. It's really hard. Let me give you a really good example using Richard. I'm going to use Richie as an example. No, Coco, TC2000 is not expensive. It's not expensive at all. I'm talking about where you want to put all your stuff, my indicators and all that stuff. So to give you a real good apples to apples kind of, let me give you an example of Richie, okay? Richie traded stock and stock options for months. He started getting really good at it. He was using Thinkorswim. I started talking about different platforms. He's like, nah, I like Thinkorswim. I'm not switching. I'm not doing any of that. No, 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 no. It ain't happening. Blah, blah, blah. He liked Thinkorswim, which is Matt loves Thinkorswim. It's a great platform. There's nothing wrong with it. Then Richie started trading futures and realized that he could get a much better fill using a futures broker. So he started using TradingView for all his futures trading. And he still uses Thinkorswim for all of his analysis on stocks. Okay? And still uses it to trade stocks. That's it. And then some people will just switch over to TradingView because they just don't care that much about Thinkorswim, or they don't trade stocks or whatever. And they'll just use TradingView. Or they don't trade E-minis and they don't day trade and they're just swing trading. And in that case, they just basically they're not very active. And then Thinkorswim TC2000 would be good. So again, it's not the platform. It's not the platform. It's you. You're the question, not the platform. It's like that webinar I had on what was that webinar? I think I had it on what was it? I don't remember, but it was when I showed how if you're using different cars, you can have a bunch of different the all access webinar. How
Right.
for dirt roads, this car would be best for this. So you will answer that question you will gravitate towards one or the other or all of them. That's something that happens to you organically. But I'm letting you know that Thinkorswim and TradingView are the ones that are compatible with most of our stuff. And if you want to do your own stuff, or you want to do longer term analysis, or you like to chart, then TC2000 is really great for that. And it could do a lot of stuff too. It just depends on you. You're the question mark in that equation. Okay. Why does he like Thinkorswim? Because Matt always takes he likes the most complicated. If there's a left or a right and the right is 5 ways longer, he will take the right way. No, he likes it because it's more advanced. It's got more data. It tends to be very accurate. He's very comfortable using it. And it could pretty much do almost anything you want with the right programming. It's also a pain in the ass to use. There you go. TradingView is easier to use. TC2000 is easier to use. Again, it's not a. I find Thinkorswim to be a big pain in the ass. But where do I have my scanners? Do me a favor, Matt. Where do I have my scanners and where do I have all that stuff? Thinkorswim.
Yep.
Because they're very reliable. It's very professional. I'm just being honest with you. I'm just telling you the truth. It's not
and the other thing is this, Roger. If you think about it, if you think about the number of markets that can be traded and the number of indicators that are out there that are available and the number of people that like to trade, Thinkorswim positions itself as almost being something that can be tailored to anyone.
Right.
From that perspective, as you're right, when you go in there, you're going like, oh my God, this is like, I'm starving and I've got a menu here with 3,000 items on it. And I want to know which ones to pick. But once you just get through that process, you can tailor it to meet your needs. But I agree with you, Roger. It gets back to the individual. What are you looking for? What do you want? Simplicity, things of that nature. It's very difficult.
Yeah, it's just, and I'm being honest with you. I'm telling you the truth. And by the way, just to be clear, everything I'm talking about right now has nothing to do with your execution or your brokerage. I'm talking about your analysis tools. Your
Yes.
analysis tools. Thinkorswim, obviously, you trade through Thinkorswim. Um, TradingView, you can connect to hundreds of brokers, integrate with hundreds of brokers. And trading TC2000 also integrates, but I think it's expensive, and I've never done that. Again, there there is no best. If it's a nice sunny day, you take your convertible out, and if it's you're going somewhere, with a when it's going to rain and maybe a little Texas driving, you take off-roading. I'm just telling you how it works, and me telling you this is the one, this is the one, or this is the one, or that would be just lying to you because they all have their strengths and they all have their weaknesses, and that's the truth. And nobody will be able to tell you what's better except you. If you come to me and you say, well, I'm doing this specifically and nothing else, and I'm not going to do anything else, I could tell you. But if you just want to know, general speaking, there is no better one. It's dependent on you. And that's the best answer I could possibly give you.
Yep.
Okay. Okay. So let's talk day trading. Okay. Day trading. Now, there's a couple of things. That pull up my, that's not it. Want to pull up my, oh, there it is. I got too many monitors.
Nine to be specific.
Yeah, 9 to be specific. I wanted to talk about different ways that we trade. We have a room which we'll talk about, which is called Trading Zone Live. We have a room, and I wanted to show you the tools that we use to trade and determine price action in that room. So, let's see. I'm just going by my notes. I want to make sure I don't miss anything. Okay. So let me show you all the tools that we use. The first thing we start with is market internals. Okay. Now this is really, really valuable. Now we look at this, whether we're day trading or swing trading. I look at this throughout the entire day, and I have it on its own screen, and I never take it off. Okay. And it's very important to me. And folks, if this is something you should always have on your screen, whether you're trading stocks. You see, if you're thinking to yourself, well, I don't really need this, Roger. I'm just swing trading stocks, or I'm day trading Microsoft and IBM. What the hell do I need this for? Let me explain to you. This is giving you the underlying current in the market in real time. So let's say you want to buy NVIDIA, hypothetically speaking, of course. And let's say you want to buy NVIDIA, but you want to make sure you're buying it at a good price. Well, it may be a good idea to watch the market internals bottom out and start coming up before we start doing that first, for example. So like Omar, Mr. $4 million man, he trades mostly day trades stock options using the Pro Trader dashboard. Okay, but we exchange emails, and Omar. Oh, I thought that was Omar right there. Omar he's in France, so he uses TradingView. Yeah,
Yep.
TradingView. But what I wanted to say was that Omar's eyes are glued to market internals. He's like, this market internals and me are best friends. So he is here. Omar, if you're here, please correct me if I'm saying anything wrong. The last thing I want to do is put words in your mouth. Yes, it is. Yeah, there he is, right there. So yeah, we were just chatting this morning, or he responded to me this morning, and he uses this market internals all the time. So I don't care what you're trading. I don't care what you're doing. If it's related to the U.S. stock market, you should be looking at this in real time. You should be looking at this in real time all the time. You know who's looking at this all the time? Richie's looking at it all the time, all day long. Omar's looking at it all day long. I'm looking at it all day long. Matt's looking at it all day long. Matt, do you have a separate screen for them?
I do.
Think about it for a minute. Let that sink in. You see a common theme here? Okay. So the first thing here is the Vold. The Vold. And if you're using TC2000, it's called T2104. T2104. Okay. Jason says constantly using it. So what this does now, this is where things get a little hairy. This is a 5-minute chart. This is 1 day, 5-minute chart. I never once in my life, I know this may be, and maybe I'm making a mistake, but I've never once in my life looked at these levels, whether they're positive or negative. I look at this basically from the start of the day until the end of the day. I don't take into account the actual number that it's at. I only look at, is it going up? Is it going down? Is it going sideways? You understand? So if you were to ask me, well, do you need Volt to be positive or negative? My answer to you is going to be, I have absolutely no idea. Not one time in my life have I ever looked at that. Okay? My job is to look at whether it's, you know why? Because this is volume. And volume to me isn't an absolute number. Volume to me is a relative number, relative to what's happening right now in the market, not a price level or an absolute level. It's kind of like the wind is blowing. Do you take all the wind that's blown and measure it to see where it is? No, you just take it as it comes, right? You don't go sit there and say, okay, from we've collected this much wind going from here to here. You don't do that. You just measure the speed it's moving at right now. So to me, where it is, this number -7, 8 mil, this means nothing. Now you're probably going, Roger, you should probably look at it. Well, I've never looked at it once, and I'm not going to start now because I don't care what it is. Okay, so you see how it's moving up. Now look at how interesting this is. Both the Vold, this is the Vold, and this is the SPY. The purple line, purple rain here. This is the SPY, and this is the Vold. Okay, so look, they're both going down. Okay, they're both going down, but right around 10:55, what happens? What happens? What happens to right here? What happens at 10:55? Right here, 11 o'clock. We bottom out on the Vold, and both the SPY and the Vold go up, but then the SPY comes down.
Mm-hmm.
We have divergence right here, right? Look, Vold is going straight up, and Vold is going straight up, and SPY is going straight down. So a little more, this goes up, and what happens to the SPY? It catches up to the Vold. Right. Notice the Vold is not catching up to the SPY. The SPY is catching up to the Vold. And now, again, they're locked together. So here we had a divergence, and the SPY caught up to the Vold. Okay. I think the reason Matt is not taking this trade is because we don't know if the news is going to come out and how that's going to react, and we're very news-driven right now.
Yeah, and the volatility will be huge.
Yeah, and the volatility.
Either way.
Right. The risk for the reward will be too high. Now, 1 second. I need to do something here. Now, hold on a little. I like. Okay. All right. So this is really, really important. But most important is the divergence. When it's diverging, that's the key. Because most of the time, it will start catching up with and that's your edge. That's a big, big edge right there. It's a big, 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 big edge right there. All right. All right. I'm going to really quickly, just give me 1 second. All right. We just want to take a little profit in the pit, Raleigh. Sorry about that, folks.
No problem.
Yeah. Folks, did you make money in NVIDIA in the pit? Let me know. All right. And how are we doing in here? Good. We have a good room here. Excellent. Excellent. Okay. So the key is not to, and also when you see the Vold coming back, forth, back, the more it goes back and forth, the less efficiency it has. You want to see it move like this, or you want to see it move like this. All right. That's what you want to, that's what you want to do. Okay. So again, this is really important. Really important. Really, really, really important. All right. Good. Jason made 22% on NVIDIA. Lloyd made 300. I don't know how you made 300% on it, but whatever works. Maybe you went really far out of the money or something, Lloyd. I don't know. Don't you guys love the pit? The pit is the pit. I love it. Okay. Now, what about ADD? This is really, really important as well. Like really, 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 really important. Okay. This tells you the number of stocks trading above or below the previous closing price. And that's very important. And I'll tell you why. If you notice, if your stock opens right where it closed, it usually doesn't do anything that day. But if you notice a stock opening above, like sharply above or sharply below, they tend to move. They're on the move. They tend to have volatility. That's what this is right here. Okay. That's what this is right here. This tells you how many stocks. Now, if I see this at 800, 900, 1,000, 1,200, that's meaningful. 200, 300, 400, that's nothing. That's like a little. So to give you an analogy, and I've done this before, but I'm going to do it again to give you a really good analogy. If I take a basketball, okay? If I take a basketball and I throw it from here, from 8 inches, how much will it bounce? It's not going to bounce, maybe half an inch.
Yeah.
What if I throw it from the Empire State Building? That baby's going to bounce like several feet in the air, Do you understand the difference? This is what ADD is telling us. That's why I always tell you in the morning, let's see where, that's why I always say, let's wait right here. Let's see what ADD opens so we can tell if it's going to be a really, really volatile day or if it's just going to be a crap day. And you can usually see by where the ADD opens. So today we opened up at 1,300. And look, they immediately, literally, starting with the first candle on the day, Raleigh. Look at this.
Yep.
Straight down. So straight down. Also, Bold opened, didn't really go very far, and then just started going straight down. Mm-hmm. So the first part, remember what I said? Choppy profit taking in the morning?
Yep.
That's what this is. Remember then I said we bottom out, we make a little low, we touch the 8-day EMA, we pivot, with a little tag right here, we tag the 8. I said it 3 hours ago, folks. Mm-hmm. We tag the 8-day EMA right here, and then we start coming back up. Do you remember that? I said it this morning.
Yep.
Very, very, right here. Here we opened right there, too much too fast, tagged it, cleared it, saw that buyers wanted to come in, and ba-boom, ba-bam, ba-boom, right there. Okay, so I didn't give you wrong information. Wesley says yes. All right, but it wasn't that long ago. It was only a couple hours ago. Where's Roger in the morning? Right here, where I'm always at, doing this from 8 to 9:30. No, 8 to 9:15. Today I was live from 7:50 to 9:15. Actually,
I know.
Yeah. Yeah. It's like you've seen this movie before. Yeah. Well, welcome, Gracielle. I'm going to close the chat. I'm going to let Raleigh deal with the chat so I could do this, but welcome. So again, now you understand this. This is like getting a measurement of how far up the ball is bouncing from. You understand? This is the rhythm, how much rhythm the market has. So so to give you a little tip, this is a great indicator of whether you should be using big stops, mental stops, or very, very tight stops. For example, if this opens at 200, positive or negative, and you see the market is opening down, don't panic. It's only down 200. There's no momentum. It's probably going to just chop around. But if this opens down 1200 and the market's going down, that's something to panic. You may want to start using bigger, wider stops. You understand? So this tells you the elasticity, the rhythm, how rhythmic the market is. This tells you where the volume is moving into, and volume precedes price. This tells you how rhythmic it is, how much rhythm, how much elasticity it has, how much air is in the ball. Does that make sense? How much air is in the ball? I think that makes sense for a lot of people.
Yeah, it's a good analogy.
Yeah, how much air is in the ball? Okay, all right. And I think NVIDIA is going to go a little higher, by the way. I think we're going to go a little higher on NVIDIA right now. Okay, next one, next indicator. This is the tick. Now, this is really, really important when you start seeing those big moves, because this is the gas pedal. This is the rhythm, this is the volume, and this is the gas pedal. So let's say that you right now we're sitting and watching the market, and this happens to be the SPY right here. This is the price action on the SPY right now. And let's say the SPY pulls one of these right now, like a big bar. I mean, the bars have been very small and sleepy the last couple hours, which is indicative of the market being in hurry up and wait mode. But nonetheless, imagine you see a little run bar like this, okay, right here. Well, the first thing I look at is at the tick, and I'm seeing if there's any real buying behind it. Why am I doing that? To see if there's going to be any follow through. Because if there's going to be real buying behind this, if this is up, if somebody's really pressing on the gas pedal, there may be some real, this may have legs, versus being a what kind of candle, folks? Let's see if people pay attention to what I say. What kind of candle? What are we checking for this? What are we checking for? Yes. Oh, people actually listen and pay attention. Solo candles, exactly. We do that to see whether or not it's going to be a solo candle. What is a solo candle? Exactly what it sounds like, a single candle. A single candle. A single candle. Basically just an isolated candle that doesn't go anywhere. All right? So this tells you if there's really, like a few days ago, it might have even been Friday, there was market moving. Market was moving, okay? But I was looking at this, and the downside was really limited. So I knew that, hey, there's not a lot of gas behind this. But do you see how this tells you if the market is set to go higher or lower? Okay? Notice this is going up, and the market is going straight up right now.
Mm-hmm.
This, although it went down to almost a flat level, it started bouncing back up. So folks sold off, took advantage of the morning. The FOMO Joe took advantage, sold off his position in the morning, and now they're reloading up again. They're reloading up for another round right now. This is telling us that. Remember, every chart tells a what?
Story.
A story. Every chart tells a story. And this is telling us if it's just a couple of guys playing around or if there's real volume coming into these moves. So this validates these moves, okay? Now, what is this? This right here is the level where the most price was conducted, most business was conducted at this price over the last 5 days, okay? This is the place where the most business was conducted. So this is the street, the alley, the dollar figure. This is the magnet right here, 675. That's where the most of the business was transacted. This is 70% of the value area. We're still very much in the value area. So we're not out of balance yet. We're still within the value area, which means price can stay here and hold here very, very well. You see how I'm using this to interpret everything?
Mm-hmm.
We're still in this value area. If we were up here, I would say we're now starting to get a little far ahead, which means now I need to see something really come in here. I need to see something support this. Okay? But again, this tells me what direction we're set to go into the next half an hour to an hour and a half. This is telling me if there's actual rhythm. Basically, is the crowd big? Is there a crowd? Do I have a crowd? Am I dealing with a lot of, or is there just like 10 people in the audience going, like like is there a big crowd supporting the moves? And here, this is telling me, is there actual volume behind it? Like, does this crowd have a voice? Like, am I going to be able to hear them? So, real important. And this is telling us this is telling us what the favorite song of the concert is right here. We know when this song, when all hell breaks loose, this is the price right here. And we're not that far off of it. We're only 3 points up from it. No problem, man. Well, that's what I'm here for. Okay. Most businesses' highest volume, Glenn. That's right. I'm just using metaphors to make it real, to make it more entertaining. But most business highest volume, most popular couple, the best song in the band. This is where this price. At this price, this is where everybody goes and does their shopping right here at this price. 6 in the last 5 days. By the way, look at price right here. How it just sits there. Right at the 5-day point of control. And we're still within 70% of the area. This is over the last 5 days, 70% of the price was within this area right here. Now, VIX, what is VIX doing right now? VIX just broke the low. That's really good for the bulls, and that validates this. The only thing that I'm not liking here is the bond market.
Yeah.
Which is at the lows. And I've been saying that since the first minute. Let me send them a little update. If you missed the fill on NVIDIA, now at 196.36. There you go.
So to that point, Roger, I think people are just wondering about this. Everything that you just shared with us seems to be moving in favor. And then you said, but the bonds are bothering me. Is that a big enough of a pause to say, hey, let's wait and see what's happening? Or do you basically look at that more as an anomaly and move forward cautiously?
That's a good question. I would move forward cautiously. Here's why. Because, and again, I can't anything I cannot prove to you. I always say I can't prove this to you because I can't prove this to you. But my belief is that the bond market is in the crapper because the bond market was moving up in panic that the government shutdown was going to extend itself.
Right.
And the government shutdown did not extend itself. Okay. Beyond like Thursday and Friday when it started impacting
so like it was
the
a
private
flight
sector.
to safety move or something.
It was exactly
Yeah.
that. It was flight to quality. That's exactly what it was. Flight to safety, flight to quality. We're saying the same thing. And so now I think it's coming off of that. It's coming off of that it's coming off of the sugar high, if you will.
Yep.
Okay. It's coming
Whereas
off.
that same thing could be motivating the other markets to move higher. So they're a little bit out of balance here. Okay.
Exactly. Yep. If we were not in the current situation, I would take the bond a little more seriously. And the truth is that all that data from the Fed, that the late data, maybe it's going to be good. I mean, we don't know. I mean, we don't know.
We don't know.
We just
That's
don't
right.
know. We don't know. So I don't want to read into it too much. And the truth is, look, the market is just a few few points from all-time high. It's not like we're crashing and burning. And as you could see, volume is now breaking out at lunchtime, almost at lunchtime, breaking out here and going higher. Notice, though, there's very little support for it here at all. And this is barely going up. So we got to be really cautious here. But I like what I'm seeing. And this is clearly leading. What I don't like is see how small the bars have gotten? See how the bars are like tiny? That's the problem. That's a very non-committal move. It's a very non-committal move. But I do like what I'm seeing right now. I do like what I'm seeing. I would be foolish to tell you I don't. As a matter of fact, let me just pull this up here. One thing about me, folks, I'm not going to give you some Mickey Mouse answers or some BS answers. We need to get above this level right here. I'm not going to tell you what you want to hear. I'm going to tell you the truth. And I think most of you know that by now. Okay, so we're in this area, which is great. Now we need to get above this area. And
Hmm.
that I'm doubtful of because there's no catalyst. But what I will tell you is that the fact that we made it down like this and made it back up is telling us that everybody who liquidated their positions, or at least they're reloading. This is a very nice V bounce right here, and we're back right into our area here. My only concern is we need something new that we didn't have this morning to get us past this, and I don't know what that will be. That's my big concern. So I would take it slow and easy here, especially if we start getting above the 680 level. Okay. Let's answer
Perfect, Roger.
Let's do some questions, okay? Vivian says, what is the relationship between TLT and SPY? Well, it depends if the market is deflationary or inflationary. TLT goes up, bonds go down, yield goes down. TLT goes down, bonds go up. So they're inverse of bond yield, okay? So bond market going up and stock market going up is very normal. That's a very healthy relationship. Bond goes up, yield on interest rates go lower, which makes money cheaper. So bonds going up is money getting cheaper. Stocks like money getting cheaper, unless you're a loan shark or financials. Hopefully, and you can always you can rewatch what I just said, Vivian. You can just rewatch the video if you want to rewatch it a few times. But I just explained it to you. Do I feel
Yeah,
like
and by the way, I thought that explanation was fantastic, Roger. I mean, literally, what drove the bonds? You call it a sugar high. It's coming off of that, and
yeah, yeah.
you're just not giving the same weight to it as if we didn't have the shutdown issue. You give it more weight if that wasn't sitting there.
Yeah, that's exactly what I'm doing. And I'm going to tell you guys right now, if we resolve this government shutdown, we're going to bolt higher. It's not a technical thing. It's just a fundamental thing. It's the market's going to be very happy. The question of how much of it is already priced in.
Hmm.
That's the big question. But I'm telling you right now, I'm not seeing any I'm not really seeing any I'm going to Craig. I'm going to do a class, and in half an hour I'm going to repeat all that stuff and answer your questions. But so far things are looking pretty good from where I'm sitting. Look at this. I mean, it's at the high of the day right now. You know, one of the things I want to bring to your attention, and something you guys need to understand, something making a high of the day at 12 o'clock in the day or 1 o'clock of the day is 10 times more powerful than it happening at 9:30 or 10 o'clock in the morning. And I'm using Eastern time. What I'm saying is this: if the Vold makes the high of the day at 10 in the morning, or if the SPY makes a high of the day at 10 in the morning, it can just be morning excitement, morning FOMO. But for the market or an internal indicator to make a high of the day at 1 o'clock in the afternoon, where everybody's going, that means there's something really there. So one of the things that what I always look at is when we make 1 hour highs, or we take out the highs in the middle of the day. To me, that's a lot more valuable than us taking out a high first thing in the morning or at the end of the day. Do you guys understand? Because you don't have the tailwind right now in your back. So
Right.
you've got something making your volume is coming into advancing issues at the highest rate of today, literally at almost 1 o'clock Eastern time. The SPY is coming off of these levels, and this is nice. There's not a lot of wicks yet, as of yet. I don't want to jinx it, but this looks really good. There's not a lot of stuff here like this. See how wicky this is? There's not that many wicks here. This is moving up with gusto. And internals are still moving higher. They're still moving higher. Remember what I said to you in the morning? Opening up, going choppy, having a sell-off, looking like we're going down, and then staying choppy or going up second half of the day. Tell me I didn't say that. I did. I dare anybody. And there we go. We're breaking out of that level.
Yeah.
Which is really great. I don't care if we fall back. We already broke out of this level. That's the key. Okay. I'm going to give you now a lot of the stuff that I talked about. I'm going to repeat in a very, very organized way right now. I'm going to do, and all the questions that I did not answer today and all this week, folks, it's going to be a day trading week. All this week is going to be a day trading week. So anything I did not get into today will be automatically pushed into tomorrow. Okay. All right. Actually, I just turned it back on, Wesley, and I'm about to turn it back off. All right. I'm set. The NVIDIA trade that I sent was in the pit. In the pit. In the pit. All right. Bring this here. Let's put this here. Matt,
Yeah,
would you
and
mind?
I just want to clarify something.
Yes.
When Roger says he's turning off the chat, folks, what he's doing is he's turning off the chat for himself. He's basically
Yes.
closing the chat so that he's not distracted by what's coming up in the chat. But the chat is open to everyone, and I do monitor it. So I'll answer your questions and I'll collect those questions that I can answer, and then we'll talk about them when Roger gets to the Q&A session at the end of his presentation. So the chat is still open to everyone. We've just asked Roger to close that so that he can just focus 100% on this presentation.
Exactly. All right, folks, the profits performance shown, they're not typical. We make no futures earnings claims. You may lose money between April